A very good afternoon. You're watching the newsroom on ET Now. I'm Mubina Kabati. The markets are doing pretty okay today. We have, of course, a very important day, expiry day. This is also the Fed series of the budget, so this is going to definitely be an interesting one. Well, less than a month after the union budget, sovereign ratings agency Moody's said that there's a material risk for a downgrade for India's sovereign ratings. ET Now's Ruchi Bhatia caught up with Jean Fang of Moody's and Aditi Nayar to ask about the key challenges for the Indian economy. Listen in.
Interest payments are very high as a proportion of government revenue, and we have that at over 20%. So it's still a very, very costly amount of debt. So debt affordability is also another weakness for India's credit position.
India's ability to be able to service their debt is mostly, on account of the resources that we're raising domestically. This year, the big focus is going to be on privatization. The Prime Minister yesterday once again reiterated that execution is going to be key. The government is looking to modernize as well as monetize some of the government-owned PSUs as well as government-owned assets as well. Having said that, how critical do you think is going to be the privatization plan that the government has put out in place for the year 2021?
Well, for the year 2021, we do think
the government has put out in place for the year 2021.
Well, for the year 2021, we do think that the government's own fiscal deficit expectations of 6.8% are rather reasonable taken as a whole. So we think that the government's used a relatively conservative estimate for nominal GDP, and we do think the tax revenue expectations are also quite reasonable. We aren't as sure about the ability to execute around monetization. I think those are parts of the overall revenue plan where we probably have the biggest questions. Certainly the ability to execute is key in this scenario, as with many other parts of the budget. But I think that overall the fiscal deficit expectation of 6.8% is relatively reasonable. The most questionable part will be with the monetization, but there are other parts which we think are relatively conservative.
Right. In fact, we have Aditi as well back on the line with us. Aditi, you were talking about growth expectations going forward, and to also talk to us about how important will be for the government to be able to raise resources at a time like this when the government has said that they will be looking to privatize not just the PSUs, but some of the PSUs, but also some of the government-owned assets under the asset monetization program as well. Talk to us about how important is execution really going to be?
The budget outlined a lot of very interesting initiatives and did commit a lot of resources as far as capital spending is concerned, all of which are very welcome. But how quickly we see execution around some of these announcements, especially around the capital spending program, is going to be very key to be able to push the growth in FY22 to a higher level and then help to get it to a higher trajectory over the medium term as well. So execution is really going to be key as far as the government's announcements are concerned. Now, in terms of the revenues themselves, there's been a lot of discussion about the revenue assumptions that have been made for FY22. And what we believe is that while the net tax revenue growth seems to be largely in line with the growth in nominal GDP that we're expecting at this point in time, some of the individual components are forecast to grow at 21 to 23%. In fact, the bulk of the large tax revenue sources are already forecast to grow at 21 to 23%, including corporate taxes, personal income taxes, CGST, etc. And this is because we're coming off of a very low base of FY21. So even if nominal GDP growth ends up being higher than what is being currently forecast by the government and the market, it's unlikely that we're going to end up seeing too much of an upside on the revenue receipts. On the other hand, we've got an ambitious target for disinvestment. The pipeline is certainly very strong, but it remains to be seen whether we're going to be able to close all the transactions within FY22 itself.
Right. Jean, if I can come to you on, some of the vulnerabilities that are there for the Indian economy. This year we have seen the government infusing as much as 20,000 crore rupees into the banking system. Besides that, a whole host of steps have been taken to ensure that the NPA stress is currently at least not there as far as the banks are concerned. But going forward, do you believe that perhaps the NPAs could spiral out of control? Because the Finance Ministry believes that the situation will not be as bad as what the RBI's stress test seems to indicate.
Well, I think broadly speaking, we are of the view that the banking system in India has probably averted the worst case scenarios that one may have feared 6 months ago. On the other hand, I think the overall health of the financial system remains a question in our mind, and I think it's a question that could really impact the way we see growth play out in the medium term. When we look at the budget specifically, we do think that the capital injection provided by the budget is enough to stabilize solvency with the public sector banks, maybe not quite enough to provide a lot of excess capacity for loan growth, however. Other measures, such as the asset reconstruction company, could certainly be helpful, but again, as mentioned already, we'll see how that plays out in execution. Hopefully that does provide some additional relief, but we're looking at the broader financial system, not just the public sector banks, also the private sector banks and the non-bank financial companies, to assess whether or not there is indeed a level of health and capacity there to provide credit growth as the economy continues to gain momentum, and hopefully to provide the kind of credit growth that we'd like to see in our medium-term forecasts.
Whether we will see a good credit growth for the banking system will really depend on the pace of recovery. Aditi, I want to understand from you, even as the data is signaling that there is, of course, broader economic rebound that we will see in the year 2021, you've said that consumption recovery seems uneven. What do you think are the reasons behind it, and what do you think that the government needs to do to address this challenge?
Sure, Ruchi. If we look at even the latest round of the consumer confidence survey released by the RBI, and we look at the current situation index, there's a very mild uptick that we've seen from the all-time low that was there in September 2020. So the improvement in consumption sentiment is there, but it's very mild, and it's still well below the levels that we saw in the pre-pandemic period. So this is leading us to believe that while the formal part of the economy has really come back to the pre-pandemic levels, the informal part of the economy and the contact-intensive sectors, are still lagging. And especially for the informal part of the economy, where there are not too many other proxies that we have to be able to gauge their health in a timely manner, we think this is a very key indicator that's telling us that there's a large part of the economy and there's a lot of people who were employed in the less formal, informal and the contact-intensive sectors, who are only sort of getting back to normalcy. And when we look ahead into FY22, we think that the consumption recovery is going to be very differentiated across age and income groups. There's possibly going to be a section of people who, after they get their vaccines, are going to find that there's a lot of pent-up demand in terms of things like recreation, entertainment, etc. And that's going to lead to a back-ended boost to growth in the second half of FY22 going into FY23. But there's possibly going to be a lot of people who belong to the informal sectors, or people who are self-employed, who had to really dip into their savings to get through the pandemic, who are only going to get back to a pre-pandemic level of non-discretionary expenditure and really try to rebuild the savings that they had to dip into during the pandemic. So we don't expect it to be a universal sort of roaring back of consumption. We think that there's going to be a very differentiated response from different sectors, and therefore the recovery in GDP growth is also going to be
Well, that's, of course, my colleague Ruchi Bhatia in conversation with Moody's and Aditi Nayar talking about, the implementation ability of all the things announced by the government of the union budget. Well, for now, we'll take a very short break on the show. Don't go anywhere. We'll be back.